US and China signal talks to avert sharp tariff escalation as markets weigh risks. US Treasury Secretary Scott Bessent and Chinese Vice Premier Lifeng plan to meet in the coming days in an effort to prevent a steep escalation in tariffs on Chinese imports. The discussion follows recent calls and preliminary contacts aimed at extending a fragile truce that is set to expire. President Donald Trump has threatened sweeping tariff increases absent concessions on export restrictions and other disputes, while acknowledging that across-the-board measures would be difficult to sustain over time. Businesses with cross-border supply chains are bracing for potential changes in costs, delivery times, and compliance requirements. Importers of consumer electronics, machinery, and inputs say contingency plans range from pulling forward shipments to diversifying sourcing, though many products remain hard to relocate quickly. Economists warn that a broad tariff shock could lift prices, unsettle investment, and test financial markets already dealing with uncertainty about growth and interest rates. Diplomats familiar with the talks said both sides have incentives to keep channels open. Beijing seeks predictability for manufacturers and exporters, while Washington wants to protect domestic industries without spiking inflation. Any pathway would likely involve phased steps, verification mechanisms, and opportunities to revisit terms. Investors will watch for signals on tariff timing, carve-outs, and the scope of export controls, along with references to a possible leaders' meeting that could frame a longer process. For now, companies are stress-testing budgets and inventories against multiple scenarios, waiting to see whether negotiations yield breathing room or whether a new round of levies forces rapid adjustments.